This webinar is hosted by Admiral Markets, and we are going to talk about trading breakouts. So I will show you how to trade breakouts, dangers and traps, and I will present you a few trades to trade London breakout and classical breakout pullback continuation trading. But before I begin with my webinar, I will kindly ask you to listen to Mr. Mikhail. He will explain a few things about demo trading, about platform, and about investing. So we will continue after Mikhail. So give him few minutes and we will continue with trading breakouts.
Good afternoon or good evening to everybody. Good evening, Nenad. Thank you very much for a wonderful introduction. Thank you very much appreciate it. My name is Mikhail Olehov and I'm a client relationship manager at Admiral Markets. In essence, my job is to create the best possible trading environment for you. Here you go. Here is all my contact information, my name. You can Google it all the time to find me on LinkedIn and add me as a connection. I'll appreciate it very much. Here's also my email, my phone number, and also my Skype. You can always find me online, talk to me, ask me any questions. I'm very happy that a lot of people are actually taking advantage of it. I have gained a lot of new connections and I'm very happy for it. Today I wanted to speak to you about something that is really important to me. And the subject I have chosen today is something that I can easily refer to because it affects every single area of my career and personal life as well. Today I wanted to speak to you about procrastination. Initially my plan was to talk about it a week ago, but something interesting was happening on Facebook and then a new episode of Breaking Bad came out, so I had to bump my deadline for a week. But in the modern world, procrastination is one of the main barriers that stands in the way of success, no matter what is at stake. Right now, all of you are here for a reason. You have a plan and a name. You're looking for an extra income and then possibly you hope to achieve full financial independence. And once that happens, the sky is the limit. With a leverage of 1 to 500, a few good moves elevates you to the world of riches and excess. Yachts, penthouses, an Aston Martin DB9 to take you to the gym, and a Bentley to take you to that Michelin star restaurant you really like. It's a financial market where sand turns to gold and everything is possible. So you thought about all of that, you turn your attention to Forex. Forex is great for retail customers. Low commissions and transparency. So well done. You found a Forex broker, Admiral Markets. Great choice. And then you decided to get some additional knowledge. So you came to this webinar to learn. Pretty much, it is fair to say that Ferraris and yachts, all that is riding on this webinar. Maybe those 2 hours of learning will open a door to a brand new world. Yeah, right. You're near a computer. And our reports actually show that 25% of you who are listening to me this very second are not going to be here in 20 minutes. You're going to wander off somewhere else on the internet, Facebook, Flickr, YouTube, anything else. This is actually the data that we have. So we have financial independence on one side, writing on this webinar, and then we have funny cat videos on the other side. And a quarter of you thought, well, I think I'll go for cats. Because, cats are here and they're now, and, I never thought I was going to earn anything anyway. So 25% of you went ahead, said no to their future, and decided to look at cats instead. So for all of you cat-loving people, there is a way. I will teach you about something that will help you stop procrastinating. In 1920s, a Russian scientist called Bluma Zygarnik, and she was a psychology graduate. She found herself in a cafe in Vienna, and she made an interesting observation. She noticed that when someone asked for a bill, a waiter would be able to quickly remember an entire order. However, when the bill was paid, and then a customer would ask any additional questions, a waiter would struggle to remember much. It seemed that paying a bill brought a sense of closure to a wager. The brain of a waiter would realize that the information was no longer necessary and would quickly erase it. So the scientist was intrigued and she returned to the laboratory. She conducted experiments and they showed that starting an activity causes your mind to experience psychic anxiety. And as soon as you start something, your brain wants to work hard to finish it. So your brain will nag and nag, finish it, finish it, finish it, finish it, until you actually finish your task. So now, what does it have to do with procrastination, and how is it even remotely connected to Forex, you might ask? Well, procrastinators usually put off starting certain activities because they're overwhelmed by the size of the job. However, if they can persuade themselves to work on something for a few minutes, they will feel an urge to finish it, whatever it is they were doing. So once again, think about all the great stuff we talked about earlier. Think about a Ferrari, a yacht, a penthouse. Is that a good enough reason to stop procrastinating and learn Forex? I actually think it's 100% a good reason to stop procrastinating and start learning Forex right now. So first of all, watch this entire webinar. Do not go watch cat videos at any time. Stay for a whole 2 hours and Nenad will teach you a lot of useful information. And once the webinar is finished, do not reward yourself with pointless browsing on the internet. Go to admiralmarkets.com and register for all the upcoming webinars and training sessions. And once that is done, register a demo account if you don't have already one, and do your first trade. Do not even think about it. Start all those activities and the brain will help you to finish the rest. Pure psychiatry, scientifically proven. Thank you very much for your attention. I hope it will help you, and I hope all of you will finish today's webinar. Thank you very much for your attention. I will now pass the microphone back to Nenad. Thank you very much.
Thank you very much, Mikhail. Thank you. Thanks a lot. Yeah, indeed. If you trade a lot and if you learn how to trade, maybe someday, well, we'll get a Ferrari. Who knows? Well, let's back to our topics today because we have a lot to do. We have trading breakouts. Breakouts are very, very specific way of trading, and you will learn how to do that. But just before we begin with breakouts, I would like you to present a small risk disclaimer, and you already know it. You already know the disclaimer. After I finish with this slide, by proceeding further, you accept all the risks associated with Forex market. So let's start with trading breakouts. Save your questions, guys, for later. I will answer them, all of them, just after I finish with webinar. So what are breakouts? Why is good to trade breakouts? When to trade breakouts, opportunities and dangers, and type of breakout trades, how to trade it on practical examples. So, what are breakouts? Breakouts basically is what occurs when prices exceed previously determined support or resistance levels. That usually means that breakouts are, well, they are done usually by breaking daily lows or daily highs. Or, well, if you want 15-minute highs or 15-minute lows, if we go with the trend. If you don't go with the trend, that's usually daily highs and lows. Long positions are triggered when price moves above resistance, but short positions are signaled when price drops below a clearly defined level of support. So there are two ways. And trading breakouts can be done with the trend, but also it doesn't mean that you want to trade with the trend when you trade breakouts. You can also trade breakouts with contrarian strategy. You can also trade breakouts on lower time frames. You can scale in your trades. You can add to your positions. So trading breakouts doesn't have to do anything with trade trading, but also it can be done along with trend trading. Usually breakouts are more or less scalping trades. So there is a special how can I say, a subcategory of scalping, and that is breakouts. So because when we trade breakouts, what we do is basically we scalp the market. We don't go for many pips. We don't go for we don't have clearly defined stop loss. We usually go with mental stop loss, and we go with that immediate momentum. And that immediate momentum is very important for breakouts, because stops are usually collected after price breaks huge or big or good support and or resistance level. So breakouts on longer time frames create more significant changes. Why? Because when breakout on a longer time frame happen, that means usually that the price will continue in that desired direction, right? Well, if you follow again, and I think that you follow mostly my analysis, which I publish daily on Admiral Markets, Spiders there, and Twitter, and you know that a few days ago I made analysis saying that euro will probably come to 33.50, and well, what happened? Basically, it came to 33.50, but no, I haven't made any profits from that trade because that breakout happened during the weekend, and we saw it yesterday, just prior to opening. And if you follow, there is a few websites which give you prices, or current prices. So you could see that the price went to 33.70, it went to 33.50, and if that thing happened on a normal trading hours, we could have made some profits by trading 33.50 breakout, because 33.50 is a good level, and usually when price goes above in a strong momentum, we can hope for, and we can make well, leveraged or highly leveraged 5, 10, 15 pips, it depends. So trading breakouts can be very fruitful if you know how to do it. Well, if you're willing to risk, you know, trading breakouts is a sort of risky trades. They are not very technical. There is no indicator that can help you with breakout trading. You can do it by naked eye, but you need to know the levels, and you need to have a screening time for that. So when you do trading breakouts, I don't suggest making pending orders. You need to watch price action. You need to see, is the price really going to break that level, or that break is maybe a false break? Well, today this might be a good example. Today we saw that price moved indeed to 33.85 for euro dollar. If you watch the price movements today, well, I told you buy the dips. Yeah, it is indeed buy the dips, but the price didn't have strength to break that 33.85. So what happened is, we might have now a retracement in place where gap will be filled. So usually in between those levels, let's say again euro 33.70 and 34.00, we could search for that short trade. So for all of you who shorted into resistance, as I suggested today, well done. It was technical trade, and by breaking 33.50, if you already have the trade, you could have exploit again a breakout. Now we will see whether the price will close the gap or not, but let's say that maybe today that was a false break of 33.80. But even if you went long around 33.80, you could have made some 5-6 pips, because the price didn't have more momentum to go to 33.90. So there are a few ways of momentum ways which I will teach you how to trade breakouts, and that momentum is very important, and you cannot trade it by placing pending orders. I mean, you can, but probably you won't be successful. You need to watch the screen. You need to watch the screen. Breakouts on shorter time frames have more impact on day trading. That is very true. I said previously, that breakouts on longer time frames create more significant changes. Why? Because they will determine the trend. How the trend forms. Usually we have a contrarian trade, right? Let's talk about again today, just for the sake of this webinar. Let's use this example. Always trend is created by firstly reversing the previous trend, right? So let's say that today's trend has been reversed. Let's say 33.85 reversed, and then it came to 33, let's say it came to 33.05 and closed the gap. What happens today if the price proceeds with making lower lows and lower highs? That will create another trend, a continuation of previously contrarian trend. So that will create again a pattern that the trend has indeed turned, and that was a start of new trend. So that what breakouts do, they create that wave. There will be chart display. Just wait wait later. I will show it, no problem. So breakouts on longer time frames create that kind of movement. And this is what basically those breakouts trade. Let's say this is resistance, and the price has turned of this resistance. So this is not a trend. This is retracement or contrarian trade, right? This is anti-trend trade. And then the price goes to very, very important support, right? And if the price breaks that support, and if it retests it and it proceeds lower, then we can say that new trend has been established, right? And this is the crucial breakout. This is the crucial breakout for new trend, and this is the crucial breakout for older trend. So that is either a continuation or either a reversal. And breakouts teach us that we can exploit. We can exploit both. We can exploit short trades and we can exploit long trades. It doesn't matter. When trading on shorter time frames, of course on day trading it has more impact because it will give us pips. It will give us profit if that breakout trade is successful. But on longer time frames, it's more significant because it creates a new trend or continuation of previous trend. Why is it good to trade breakouts? Well, most of you, I'm sure that at least one time you have tried to trade the breakout, right? So huge momentum spikes can lead to very, very fast profits. That is the main advantage of breakout trading. Breakout trades tend to be the fastest way of making profits, and it is true. So London breakout is typical example. Orders have been accumulated in Asia sessions, so we usually base our trades in early London and on London Open. Why is that so? This is a good now example. I will show you. Let's say this is critical resistance level. And let's say we have a London breakout, right? It doesn't matter if it's London, because breakouts can happen after the London, but London breakout is, let's say it's been a typical example for the last 7-8 years, so it doesn't matter. So let's say that this is crucial level of resistance, or that is Asian resistance, right? And in Asia the price went there, but it hasn't closed and it hasn't break above this point, right? So we can say that the highest point is indeed resistance. Asia, it's called Asian resistance, right? And now, what happens? Usually when London opens, we have momentum. The price goes like this, like this. You see that by the movement of the price that there is indeed a momentum, right? And what happens is, this level, it will go like this. It will try to break it, and at the moment of the break, the price will go boom, like this. That is breakout trade. And I will show you two ways how to trade those breakouts. And this is absolutely the fastest way of making money. It's not the fastest way of losing money. Even if you lose the trade, it's not the fastest way of losing money. It's usually what will happen is breakout will be successful. And it will indeed break to the price. And what happens? If you are long, and this is long trade, there are usually short stops around there. Every long trade which tumbles into a short stop loss trade will close the short trade. and that is immediate buy into the market. Just remember this. This is important. Every short trade that you close, every short stop that has been hit after the long trade is immediate long into the market. If you close your short trade, actually what you did, you went long. Right? You went long. If you close your short trade, what you did, you went long with that number of lots. So when these stops are collected, the price moves up in big momentum, and it usually comes to next big level or next hourly pivot point, and then retraces back. This area here we call breakout trade, and this area there we use for making fast profits. Breakout trading has a very good practice if you go with trend trades. So let's use this example again. Let's say that you are intra-week trader and that you maybe held your trade, you opened your trade around there, right? And you held it. You held for your long trade. After the price breakout, you have two positions in the profit, right? You have this position, which you opened prior to London Open, prior to that breakout, and you can make a breakout trade for double the position size and then let this position run. So that is very good also for trading. If you are already going to trade and your trade goes into your direction, you can exploit breakouts. You can always exploit breakout, right? It's just a matter of your risk. Don't risk too much, but you can exploit the breakout in those two ways. It's not bad thing to go long on the resistance, into resistance, if you see that the price will break through it. It's called breakout trading. It's not false. Breakouts do stop grabbing. This is what I already explained to you. This thing here is called stop grabbing. So stop here, stop there, and stop over there are grabbed by the long positions. They are closed, so they are immediately long, and the price continues to move north, and that is stop grabbing. And when you see stop grabbing, just exploit the momentum and take the trade. Next example, when to trade breakouts. London Open, 8 a.m. GMT. Now I'm currently in Central European Standard Time, that is GMT +2. So 8 a.m. GMT. It's when London opens. It's 9 a.m. at the London, and it's 10 a.m. my time, Central European Standard Time. Right? So go for GMT and just go to see. There is a website called I think that is Forex Market Hours or something like that. So you would know when your time zone hits that London Open. But this is now for all of you who listen to this webinar. London Open starts at 8 a.m. GMT. London is +1 at the moment GMT. We are at the moment +2. So this is Central European Standard Time, this is London time, and this is GMT. That is usually when orders have been distributed and distribution phase begins. Trading breakouts can also be done on trend trades. I told you already, scaling in. You have already established a position around there. There is a critical level of resistance, and there you can enter for another trade in your direction. That usually goes on stronger trends or on intraday trading. So you can do those kinds of breakout trades. Also, you can go with range-bound trading, but only on lower time frames, M1 and M5. Why on those lower time frames? Because if we are range-bound, 1 hour, 50 minutes will usually look like this. So there is no breakout. But if you zoom in into 5 minutes or 1 minute, you will see that the price breaks to some levels. You use hourly pivot points for that, and you can do that on a range-bound market. And it's good to do it also New York Open, and New York Open opens up at 1 p.m. GMT. 1 p.m. GMT is when New York opens up. So usually the price will go like this, and it will go like this or like this when New York opens up. If there is crucial level around there, you can exploit breakout. But you need to know the levels. You need to see it. You cannot do it blindly. You need to see it. And now, I will tell you again a few things about breakout, opportunities and dangers of trading breakouts. As I already told you, it's the fastest way of making profits. Price has a huge momentum spike as it collects stops above below support and resistance levels. That term is called stop grabbing, and because of that you have usually, if you go with breakout trade, you will usually initially make a few pips of profits. That is why Admiral Markets is great for breakout trading. Admiral Markets platform, because we have low spreads here. You cannot do breakouts with 3 pip spread. You cannot do it. Even 2 pip spread is much. This way, with those low spreads, that is excellent for breakout trading. One good breakout trade is enough for the day. If you make good, fast 15 pips with breakout, because breakouts are usually leverage trades. You use leverage for breakout trading. You will earn enough for that day. So you can close your platform and you can relax. 10 to 25 pips is, I can say, excellent for a successful breakout trade. If there is a trend, we always buy into resistance or sell into support. And I mean if there is a trend. So let's say that this is a trend, right? And if the price has not made its full average through range and it breaks through this level, we can sell it. I already told you it's okay. It's perfectly okay to sell it. Why not? You always buy into resistance or sell into support if you go with breakout trend trading. Remember that, guys. So it's not typical for us to go long into resistance and short into support. But if you go with breakout trading, you need to do that, because that is the only way that your chances get higher, because you can see it on the screen. This is big resistance and this is big support. And the price goes like this. It doesn't go anywhere. And if it breaks here, why not short it? You go for breakout trade. You go for 5, 10, well, eventually 25 pips. If there are many stops around there, the price will collect it and go for 25 pips. But anywhere, even for 5 to 15 pips is okay for breakout trading. It's okay, because usually that will establish at least an hourly trend, or maybe it will establish a daily trend in that direction. If we go through 33.30 today, I think that, well, maybe 33.40 even, maybe the gap will be closed until tomorrow. We will see. The only problem now is there is no huge momentum. These hours are pretty slow moving, so we will see. If there is no trend, if there is a ranging market, that can pose a real danger. We need to trade M1 and M5 breakouts with 5 to 10 pips of profits maximum. And I'm telling that if there is no trend, if there is only a ranging market. Don't trade higher time frames, as risk reward is poor. So if there is a ranging market like this, and you don't know where your trade will go. You need to zoom into lower time frame, find hourly pivot points, and try to exploit those breakouts on lower time frames. False breakouts are common. If we experience it, we need to immediately close the trade and then reverse it. So false breakouts, as today, you saw it. What happened? The 380 was broken, but it was false breakout. And how you define false breakout? You saw that the price had no momentum 5 minutes after it broke to 33.80. It had no momentum. It started to lose momentum. It broke to 75, which was initial spike for 33.85. And when it broke 75, I saw that the price does not have current momentum to go higher. So if that happens, you can reverse your trade into preferred way. So if you go like this, if you are short, if you are long at resistance, and you see that there is no momentum there, you just close your trade and go with breakout trade. I will show you later how to do that on initial price, which was trigger for that breakout. That's called reversing the trade. You just reverse your trade. It's trading. You need to be active. You cannot just place your order and wait the whole day. If it hit your stop loss, it's okay. If it hit your target price, it's okay. Trading is active job. You need to be active very much. So there are many strategies: scalping, swing scalping, intraday positioning. So if you have the time, if you are not on your work, if you have the time to trade, you need to trade actively, but don't overtrade. Don't overtrade. There are a few ways of making breakout trades. It's called trigger happy trades, and it's called breakout retest trade or breakout pullback continuation. So those are two kinds of trading. What means trigger happy, and what does it mean when you go with breakout pullback continuation? You already maybe know that about it, but I will again explain you. I will explain what does it mean. Trigger happy trades are done immediately at the break of last fractal or swing low or high or important support and resistance levels. We use pending or market order. I'm more for market order. I'm more for that order because by watching the price, you will get a feeling whether the price is indeed making a breakout or it's a false breakout. So you can go with pending orders. It can be successful. But if you ask me, I would go with more with pending orders. If market order is used without waiting for a retest, then we call it trigger happy trade. So what does it mean? Let's say this is a support level, right? This is support level. And the price goes like this, and it eventually goes here. When it goes 1 pip below it, you make trigger happy trade. Because you will presume that the price will grab stops around there when it breaks through this low, and it will continue down for 5, 10, 15, 20 pips. That is trigger happy trade. You don't wait for a retest. But if this kind of thing happen, it can be a false breakout, and immediately after the price falls 2 pips below, it can reverse the trade. That is the danger of trading trigger happy trades. But if the level is really, really strong and there are still possibly momentum, there is still momentum possible, then why not? You can try to exploit it. If there is a London session, if there is a New York session running with London crossover, you can try to exploit trigger happy trade. It will lead you to fast profits, but remember, these kind of breakout trades are indeed fastest, but they're also very, very dangerous, guys. So that is how can I say, double-edged sword, double-edged sword. And what is breakout pullback continuation? Let's say this example, let's see this example again. Price has broken, went there, but it has come to retest this level and it proceeded further. So this is breakout, this is pullback, and at this point this is continuation. It's called breakout retest or breakout pullback continuation retrade. If you go with breakout and you go and open order here, when you see that the price retested, it's called breakout retest. And if you open your order around there, it's called breakout retest continuation, breakout pullback continuation. So that is maybe the safest way. I think that this is the safest way for trading, but it doesn't give many opportunities. That was that kind of trading was very prominent some maybe 3, 4, 5 years ago, when we had strong trends, especially on cable, when we had strong trends on euro dollar. But today, when price really fluctuate, there is no very strong trend. Those kind of trading is, I can say that it happens from time to time, but more or less using those trigger happy trades, you can make well, I can say more money, because it's more, you will get it more often. You will get it more often than breakout pullback continuation. And if you notice that a certain pair has a strong trend in motion, then you can exploit breakout pullback called continuation trade. Trend breakouts also trend breakouts. I already told you what trend breakouts are, and I will explain it again. You have a trend like this, uptrend, right? And this is crucial level of resistance, which hasn't been broken for 2, 3, 5, maybe a whole day. And you placed your order around there, so you are already in profits. On the very next day, you see that the price has been hanging around, but on the very next day the price goes to this level. You can place your order here. Usually that first breakout is a successful breakout. Usually the first breakout. If the price is waiting for some big news, then don't go for those breakouts, because they are usually false breakouts. And I will tell you what euro dollar is waiting, and what especially dollar index is waiting. Dollar is waiting tomorrow for a decision of quantitative easy tapering or another news of US economy. So FOMC, I think it's tomorrow FOMC, so check your calendar, be prepared for that moment. I think I won't trade prior to that moment, prior for that news announcement, and I advise you not to trade it prior to that news announcement, because it will be very volatile, and we may have excessive volatility, even more than, I don't know, than NFP, and I think it will be more than NFP. We need to see a decision about quantitative easing, cues about the US economy, Chi Bernanke will speak, and I'm not sure that I will trade prior to that FOMC announcement. After that, I may trade scalp trades, but prior to that, I'm not sure. I'm not sure where the price will go. For now, at the moment, we can see that the price is indeed prone to close the gap and to go higher, but again, market is waiting. It should have, if it wanted to break 34, it should have broken it today, but the price went down, and we may have a gap close prior to tomorrow, so we will see. So we need to be patient, right? We need to be patient. We don't want to trade blindly. So when we do breakout trades, we need to know when to trade it. When to trade it. So trend breakouts are done like that. Now, London breakout, EMA 89 training example. This is a trading strategy, how to trade breakouts. that this is a trading strategy of how to trade breakouts and how to go with London breakout EMA 89 trading example. I will show you later, I will show you also the chart here. But now let's see the rules. You need to know the rules. First, open a 15-minute chart for British sterling pound US dollar. Then for cable, you open your chart, but you can also open on euro dollar, but mostly it's done on cable because cable has been more volatile for that kind of opening. Then draw a vertical line at 4 GMT time on your GBP chart. Also draw a vertical line at 6 AM GMT time on your GBP USD chart, right? You need to draw 2 vertical lines. Draw a horizontal line at the height of candle bars in between the vertical line. Draw a horizontal line at the low of candle bars in between the vertical line. Add an 89th EMA to the chart. It will go like this. So this is 6, 4. I will mark you with this. This is vertical line at 4 AM. This is vertical line at 6 AM. And we mark high and a low. So this is high, that is where we place vertical line, and in between that time we place a low, it's around there. So we get a rectangle, right? We have a rectangle. Also we have 89 EMA on the chart. Now rules. Buy trade. If the 89 EMA is below the box, place a pending buy order, or you can watch the price, but if you don't have a time for watching the price, you can place a pending buy order. So you can place a pending buy order, buy stop, 2 pips above the top of the box. Set your stop loss below the box and target the nearest pivot point. I use hourly pivot points or support and resistance level. When you are 20 pips in profit, close your trade or trail it. Price needs to break out anywhere from 7 to 8:05 GMT. We only allow 1 trade. We are trading only the first breakout. So this is very crucial. Price needs to break out from 7 to 8:05 GMT, only 1 trade, and we are trading the very first breakout. So what happened? It's 15-minute chart, you see it. The price is above 89, so the trend is up. You can see the slope of EMA. It's also important. We don't want this EMA to go like this. It's good for long trades. It's a steep slope to the north side, so that is for a long trade. PP stands for pivot point. So this is high and this is low. So we are going to exploit a long breakout. Here, 2 pips above this resistance, we go long. We place our stop here and we go. You see how the price went up? You see, the price went up in a big momentum. This momentum is typical for London breakout, so we can go with more pips than 5-10. Usually 5-10 pippers are made if we go with that standard breakout trade during the day. But London breakout tends to give us a nice movement in the very first or first 2 hours. So we can go for more pips for this London breakout. This was important pivot point, and the prices indeed went here, but you also can exploit the breakout of this here by placing a trigger happy trade. You see how the price went up. After that it was reversed, but yet again this was a great example, a great trade by London breakout trade. So London breakout is done like this. It's a nice thing to know, so you can try to experiment with this kind of strategy, and it's used for sterling pound dollar cross. Now, how to trade breakouts again? Sell trade. If you have a sell trade, that means that 89 EMA is above the box. I'm talking not above the price. It needs to be above the box. And place a pending sell order or market if you watch the price 2 pips below the top of the box. Set your stop loss above the box and target the nearest pivot point or support resistance level. When you are 20 pips in profit, close your trade or trail it. Again, price needs to break out from 8 GMT AM to 8:05 AM GMT. Only one trade is allowed, and we are trading the first breakout. So this is a sell trade. You can see also we go with the trend here. Here you see that the price is making a downtrend. Also EMA is making a downward movement. It's standing at the top of the box. It's allowed. It's better to be above, but it's okay if it stands here. It's not allowed to be there. So it's good to be at the box or above the box. Above the box is better. But what will happen is that we place a breakout trade here, 2 pips below the box. And after that, you see the price has gone to the upside, but it quickly reversed to the downside and went down. It touched the important pivot point and proceeded to go down. You see, this can also be breakout, pullback, continuation trade. Continuation at this point. So breakouts are very, very interesting to trade if you know how to do it. They can be really interesting. They can yield good profits. You can lose from time to time, but if you know what to do, you can really make some nice profits. I will show you more examples, so stay tuned. If you have any questions about this trading strategy, you can tell me. I will gladly answer. If there are no questions, we can proceed further with our webinar. Okay, there are no questions. I think you know what I'm talking about, so even better for you. Let's see another example. Here is a question. How about trading news breakout? News breakout, that is a very nice question. I don't recommend trading it with this kind of strategy. I think that I will make a webinar about just about news trading, and I will show you how to do that. It's different. You don't use these kind of strategies because news are very, very volatile, and you usually it's different thing. Now don't diversify our webinar. I will make a webinar about news trading. It will be interesting subject, so I will explain you how to trade news. But you don't trade every news. There are few news which are tradable currently at the market, so we don't want to trade each of the news. But don't do that. Don't do this on news breakout. Those news breakouts are very false. Usually can lead to inaccurate movements. I just want to close the trade prior to any big news, because very much times it happened many times. Many times it happened that I have a trade and my trade is indeed good. It's a good trade, and then what happened is there comes a news. And of course, my stop loss is hit after that. And after that, the price goes again in my direction. That has happened to me a lot of times. And I have learned over time that I just, prior to read news, I just want to close my trade. Even if it's a slight loss, I will close it because I don't want to risk more of a loss. And I just don't like price action after the news. It's very false. It can be very inaccurate. It can, I can say quoted, of course. You will mind my language. It can screw your trade, and it will make you nervous. So for now, my advice is don't trade the news this classical way. Trade it. I will explain you how to trade some news, including NFP. But that will be a subject for that news trading webinar. Yeah. So this is London. Okay, this is London open trade, this is London open trade, so use this strategy only and solely on London open. Don't use it on another opening, New York or Asia or anything else. Just use it for London opening, okay? Now, breakout, pullback, continuation, breakout, retest, continuation. Now, look at this. This is important. Continuation. It's not pure breakout, retest. We have continuation. Another question. EMA 89 in 15 minutes. Yes. No. Just EMA 89 in 50 minutes, and you don't use another time frame. You just use EMA 89 in 15 minutes time frame. Okay, what does it mean? Again, this is breakout, this is a retest, and that is that, breakout, retest. If the price goes through this level afterwards, this is called continuation trade. So we are talking now about breakout, retest, continuation trades, not just retest, because that retest can go higher like this. So we are talking about breakout, pullback, continuation. We need a pattern formation. You already know what patterns are. I've shown you on my last webinar. I showed you what patterns are. So flat top triangle, flat bottom triangle, ascending flat top triangle, descending flat bottom triangle, wedge flag, rectangle, megaphone is untradeable. What is megaphone pattern? This is, guys, megaphone pattern. You don't trade this pattern. You never trade this pattern. You don't want to see this pattern. This is very nasty pattern. I don't like it. It's very hard to analyze it. It's very hard to trade it because the price goes like this. This is no trend. This is widening triangle or megaphone pattern. If you see that, go to another pair and trade it. Don't trade that pair which has megaphone pattern on it. It's very, very nasty. It's very, very, I can say it's a natural pattern. So don't go with that, guys. So you need one of these patterns. One of these patterns. You want to see that on your charts, guys. How we trade it? We need breakout in the desired direction, then pull back to retest the levels, right? Continuation starts after the last high or low is broken or immediately after the retest. That is when continuation starts. We cling on to trade longer than London breakout. Those are trades that can be spotted on every time frame. The higher time frame, the better the trade is, and I already told you about it. I told you because that can be significant for maybe a new trend forming. So you go always try to exploit that on a higher time frame. You will spot breakout, pullback, continuation in every kind of the market, be it arranging or trading, but it's typical that it happens after the consolidation. It's typical that it happens after the consolidation. So this is the example. We have a rectangle here. You see the rectangle? That is called rectangle. Breakout, pullback, continuation can be done after the breakout of the rectangle and after a successful retest of that pullback point. So this is rectangle in downtrend. Preferred breakout is to the downside because this is rectangle in downtrend. Breakout is here, pullback is here, and continuation goes just below this point. We can place a sell order. So you see how the price reacted to that rectangle? Breakout, pullback, continuation. This is triangle, guys. This is classical triangle. consolidation into the triangle. You see, breakout is at this point, pullback is here, and continuation goes just above this pattern. So breakout, pullback, continuation. When breakout point after the pullback has been broken, we go with continuation trade in that desired direction. Now this is flat top ascending triangle. How we trade that pattern? You see, it's the same. And just notice the chart. It's 1 hour chart. It's 4 hour chart. You see, the higher time frame is more significant, the movement is. It's 15 minutes. It can be done, but the higher the time frame, the more significant move is, stronger the move is. Breakout again, pullback, continuation. Breakout goes here, pullback, retest of flat top line, and continuation is after the price breaks through here. So this is continuation trade. And now this is bearish wedge. You see how we trade it? Here is breakout and then pull back to retest this lower part of the wedge, and then it goes bam beyond breakout point. See, it's again 1 hour time frame. Breakout, pullback, continuation. Now we have flat bottom, descending triangle. Usually that is a sign of downward continuation. So what we do is we wait for the price to break out to that flat bottom here, and then what it happens is price is broken through here, retested to this point, and after the retest, this was the low, we go for a full breakout to the downside. So, few words more about trend breakouts. Trend breakouts don't give us very good risk to reward ratio, guys. They don't give us good risk to reward. Don't trade it on higher time frames than 5-minute time frame. It's not easily manageable. If you go with trend breakouts, go if you already have a position. I told you many times in this webinar, if you are long around here, it's okay to go with trend breakout. But it's very nasty if you go with trend breakout, but it's ATR, let's say, is full, it's more than 100%, it can be very nasty. It's average true range. If it's above 100%, don't trade breakouts. Trend breakout is zigzag pattern that should be only traded by a classic buy-sell into retracement. So this is a trend, right? And these are the points when we buy into the market. If you go with trend breakout, it's good to trade it only if you have already established a position or if ATR is below 100%. Then you can go with breakout. It's good around all around 20 to 80%. Then you can trade breakout. It can be profitable, but it needs a good knowledge of the levels. I can do it because I have my own levels which I use to trade, and those breakouts can be really profitable, but those are my own levels. No one uses those levels, right? Maybe a few guys I know use those levels, so that is not very common. And by using that, I am 60% sure, 70% sure that my breakout will be successful. If you already know your levels, you can also do it. Why not? Scaling in works wonders, but good analysis of higher time frames is needed. So you need to know a good analysis of higher time frames, guys. Not just of current time frame, you need to know current higher time frame analysis. So guys, those are the examples of, let's say, my levels which I use. So this is big level, and you see the price has gone there. This is breakout, pullback, continuation. Also, if the price goes there, this is, you see, breakout, pullback, continuation. But this is also a trend trade, because you go with the trend. You see, the trend is on 5-minute time frame, but also on 4 hour it's downtrend. Also on 1 hour it's downtrend. Also on 15 minutes is downtrend. So I can do that on 5 minutes. I can sell it here, I can sell it there, but both ways my trades has been, let's say that the trades can be in the profit. But I won't do that for sure 3 or 4 times in a row. I will do that usually first 2 attempts. So that is what you need to know about trading breakouts. When you're sure that you know how to trade it, go for that, guys. Go for that, because usually what will be, the price will come to you and you will be in profits. If there are any questions, you can ask me now. I hope that you have enjoyed the webinar. I hope that you will look for it again to memorize that London breakout patterns. So feel free to contact me. If you know my Forex Factory website, you know my Twitter, you can follow me on Admiral Markets blog. So I will again gladly explain everything that is unclear. So enjoy it, be ready for tomorrow. Tomorrow will be a big day, and I wish you all, guys, many green pips. And if there are no questions, okay, here is the question. What about stop loss in all time zones? Stop loss, I told you already. I will show you again. This is if you trade with this kind of strategy. Stop loss, if you go short, is just placed above the resistance. If you go, that is with London breakout trading. If you go with this breakout trading, always use last candle. So stop loss is there, above this last candle. Because what will happen usually after the price goes falsely, it will go above. So this is stop loss. Also, if you go with breakout, pullback, continuation, stop loss point is below the pullback point. Pullback point is stop loss. Here again, there is a stop loss here. Stop loss is also there, right? Here, where would you place your stop loss? You would place it above there, above pullback. Above pullback. So that is about stop loss. So we always use it, our mental stop loss, if we go with a slightly leveraged trade, or we use a standard stop loss above last high or below last low if we go with standard stop loss. But for that we use standard breakout, standard pullback candle. So it's below or above pullback candle. When will you be doing news trading webinar? It will be updated on, I think that it will be updated on the blog for the next month. I think that it will be for the next month. Great webinar with excellent examples. Thanks a lot. My pleasure. You're welcome. You're welcome. So you just need to check our website, and there will be uploaded dates about webinars. So I think I will be doing it next month. Okay, guys. Thank you for attending. Watch my analysis. Watch Chris in my webinars. Also Chris Live Trading Room. And after tomorrow, price action, I will probably upload my analysis. But I'm not sure that I will be doing any analysis prior to FOMC. So let's wait for tomorrow, and see you guys on Thursday. Bye bye, and many green pips to you.